we're talking about mortgage rates today. I just want to tell you that we're talking about mortgage rates today. And I want to briefly talk to you guys about an article that came out last week about a company that makes, smaller houses that are square-like in construction. There's a name for the company. Well, we're going to talk about that company. I don't like saying their name at the top of the hour because I don't want to give them any kind of SEO, anything like that. So we're going to talk about that article, and I want to get your opinion about that. But everybody's talking about mortgage rates, and I think it's important that we talk about that. But I need an expert in this field when it comes to it because I am not a mortgage expert. But you know who is? Kyle Seagraves. Come on, Kyle.
Wow. I personally run the mortgage market. I set all the rates, so I can answer all the questions about mortgage rates here today. It's going to be great.
Kyle is the king of mortgage rates. We got some people that have already come in. We got Construction Cronies, D-Jack, BB, Debbie Brady, Frog Boogers. That is a screen name. That is a screen name right there. Beth Newland, Lawnmower, Kingston City the first. We got Beth R, Dawn Sheave, Jennifer, Uncontrolled Speech. And Jennifer again. All right. Well, thank you guys for popping in. I'm so glad you could spend the week with us. Kyle, I want to tell you that on Wednesday, I was in Phoenix, Arizona for a total of 10 hours, but then I went to Page, Arizona, saw a factory called Zenny Homes. You ever heard of it?
I'm just learning about Zenny Homes today.
Yeah, so it's they are trying to basically solve the affordability crisis right there in Arizona, and they're building these modular homes, and they know they can build them in the factory. Their new they have a facility that they're building now, but their new facility will be able to build a house in an hour because they have it all down, automated all the way down, and they think they're going to be able to solve it there in Arizona. I got to watch the whole thing.
I'm bringing this up because this is a legitimate question, and also I love getting into a little bit of tea about, the company that we don't name, right?
Yeah, the company with no name that has a shape in their name.
Right. Okay, so there's been a couple of these companies that have come up, right?
Correct.
There's the whatever one. There's also Zenny that I'm learning about today.
Uh-huh.
So for people who have seen these kind of small affordable home companies come up, how is this different than what we've already seen with the Voldemort of affordable home factories that have been coming up that still haven't produced any home yet?
Okay, so the difference between this company and the difference between other affordable housing companies, because I've learned my lesson over the years. You haven't seen me talk about many home companies like I have in the past, because most of them are full of smoke and mirrors. They have a really good idea. They have a really good demonstration home, but they have no approval behind them. This company is run by the guy. Do you remember Sky Mall? Do you remember that? Scott, whenever you go in
in an airplane,
it's that guy. He is the Sky Mall guy. And so now he came to this idea, but this has been in the works for over 4 years before he ever brought it to public knowledge. And he wanted to make sure that he had a working model that was going to be able to be improved and built in either people's backyards or businesses or whatever. So the reason he invited me and a couple other YouTubers to his basically ribbon cutting event is because he has real customers that in the next 60 to 90 days, all of their homes are going to be delivered because they've been approved by the state of Arizona. There were politicians there and everything else. He did it the right way. He made sure he had the approval first before he let the public know they were available.
Okay. So
it's always backwards. Every time I've ever dealt with these people, they just start building these houses willy-nilly and they don't get the approval. And then they try to put them in people's backyards. And sure enough, the city's knocking on their door going, hey, no, pick them up.
Yeah, because it seems like previously it was mainly just like, here's a render, and then we're going to raise a bunch of money by basically trying to get someone to pre-order, but we don't have the thing built yet. We don't know if we can actually build a thing, but we're going to hope we put it together as it goes along.
They're kind of like
strange way to run it.
Well, they're kind of like, ask permission later. We'll ask for forgiveness later. A lot of them, like, just put it in your backyard. We'll just ask for forgiveness later.
Nice. Uncontrolled speech wants to know how big.
So they have two different sizes. They have a casita, it's like 330, and then they have a 2-bedroom that's like right at almost under 700 square feet. But I'm actually editing the video right now. I plan on having it out not this Tuesday, but next Tuesday. You'll see the whole
Okay,
shebang. And I'm editing this video. I'm not giving this to any editors. I'm gonna make sure everybody gets the right answers to their issues. So but I want to like Eddie, can you pull up the article that we're talking about? That while I was there, somebody sent me this article about the company that shall be not named. And I was like, oh my gosh. So tiny home sensation, the company welcomes investors as its founders plan to cash out $10 million. Can you imagine asking a bunch of people, invest in our product? We believe so much of it that once you invest in us, we're going to go ahead and take our money out and leave. So
I think it's a cool idea. I think you and I should start a company like that where we say, hey, look, I just want to make $1 million. Go ahead and invest. And then once we get there, we'll jump out. I think it sounds like a good plan.
So as the company has sought financial lifeline by inviting more investors in, its co-founders are cashing out. Boxwell's CEO and his 36-year-old son, company director of marketing, plan to sell 10 million in shares they own in a privately held firm as part of the recent unveiled stock offering. So go ahead and invest in this so we can cash out, so we can get our money.
Well, uncontrolled speech asks what happened to the word, the B word.
What happened to them? This is just my guess. I have nothing to confirm what I'm thinking, but this is because I've met with them several times. When I first met them, they were a bunch of engineer kids in their dad's hangar that his dad kept his sports cars in, and they had an idea that was just only on paper. So these engineer students were like kids, basically, we're going to make this idea come to life. And they built a couple prototypes, and they put it together and they had a really good time. And they just kept emailing people saying, hey, have you heard about this house? And it just so happened I opened that email and I said, yeah, I want to see that. I want to talk to them. And I made a video and it went viral. It was the first time they ever had gone viral. They even said, if it wasn't for that first video, like they didn't know that it could do that with social media. It was overwhelming to them, but it gave them an opportunity to springboard the idea even further. So it was no longer just a concept. It was, so next time I visited them, they were really hyped up. They were very excited because there were more and more people talking about it. And they were getting more investors involved in it, and then their wait list was growing. But then the pandemic hit. And once that pandemic hit, supply chain issues happened. And they were like, how are we going to do this? How are we going to accomplish the goals? But with that, they were still getting a bunch of attention. You have Elon Musk that decided to put one in his backyard. You have all this. So the attention became too much for them to stop the train off the track. Like they couldn't slow down the train. It's moving too fast. And they
So did
can't
you make
deliver
the video
what they promised.
before Elon Musk was involved with this whole thing? I guess not
Correct.
involved, but got one in some way?
Correct. Way before.
Okay.
I did 2 videos way before Elon had anything to do with it.
Wow,
but I think it just moved way down the track, way too fast for him to stop it. He couldn't stop it, And so the idea is wonderful. But if you look at their financials, you cannot build one. You can't build one for under $70,000. They're proposed to sell them at $50,000. What company is successful by losing $20,000 per home that goes off an assembly line? The pitch is that right now that's true, like, oh wow, it is 70,000, but when they build the next factory, they're going to be doing it much faster. The automation is going to make it much clearer, and they won't be losing as much money. But who knows? The robotics are what he's using to sell it. I saw the robots, but I saw better, more efficient robots at Zenny Homes that make a heck of a lot more sense than what those robots were doing at the other place.
Yeah. Is some of the problem that they weren't super honest at the beginning about the cost, basically like how the small scale was going to keep their costs high? It seems like that. I'm not super familiar with what they've talked about marketing material wise, but it seems like that's kind of been the issue, is they weren't super clear about how much it was going to cost in the beginning, where even though, yeah, later they're going to get to scale and it's going to reduce the amount of cost, but maybe they weren't honest with that in the beginning.
They were priced at $50,000 to $55,000. They were always priced that much. Yep. Yeah. So Tiny Home Sensation welcomes investors as it plans to cash out. So the CEO and his son, who's the marketing director, want to cash out their shares, but they want to go ahead and do another investment round before they go ahead and cash out. I think once once they got so far, they built that second factory. I think their hope was that a bigger company like KB Homes or DR Horton or one of these bigger home companies would buy them out. I think that's what they were thinking. Like it's just too big. It's just too big to. I don't think that there's just no way you can build that house for $55,000, right? And I don't think they want to back out on their price point, and not only that, their waiting list is like 300 and, it's like a ridiculous amount, 3,200, I don't even know, maybe 33,000 people. So just a ridiculous wait list. By the time, if you were to go on the wait list today, I think I saw on a Reddit thread, it would take you 9.5 years before you ever saw one. Maybe.
Nice. and when are we expecting to see the first delivery of like a Zinni home?
Actually 90 days from now.
90 days. Okay.
Yep. I met
Are they
the guy.
doing like a whole PR thing? Like we get to see the delivery and all of it?
I asked the guy because he didn't really want to be on camera. And I asked the guy, I'm like, hey, when you get your home delivered, could you at least send me some video of your house being delivered? He's like, oh yeah, absolutely. So
okay. Sweet.
Yeah. Yeah, he said the shortest amount of time would be 60 days. The most would be 90 days. But it's still like, just like anything you do when you're building a house, whether that's modular or not, it has a lot to do with inspectors showing up on time and, permitting and all that other stuff. So, it could be 60 days, it could be 90 days, but they need that window because you just never know.
Yeah. Yeah.
never know. I was very confused, by the way. I didn't know Phoenix was cold. I had no idea that Phoenix was cold.
What was the temperature in Phoenix?
When I got there, it was hot. And then when I came downstairs to go to this event that they had, it got cold and it kept dropping. And I was like, oh my gosh, I had no idea that Phoenix was cold.
Yeah. Last time I was in Phoenix, it was 114 degrees. So I can't imagine it ever being cold. Mm-hmm. That is a huge, oh my God, that's a huge cup. Is that just close to the camera? Or is that real?
Yeah, it's a real camera. I mean, real cup. I like big cups and I cannot lie. You other brothers can't deny.
What do you got in there?
When a girl walks in with a big cup in her face, she gets sprung.
Yeah, like Lon said, the coffee mug is normal size. Kristina's tiny.
Yeah.
With like a tiny little setback there.
Uh-huh. Is there any chance I could have someone from Zinni on? Like I said, on not this Tuesday, but the following Tuesday, you're going to see I actually spoke to the owner. I sat him down and asked him a few questions, and you'll have a video coming out. I went to the factory. It's a really cool factory. They have it on the Navajo Nation reservation, and I'll give you the whole story behind that too. The whole thing is a really cool concept. I'm really excited for them, and I don't think they're full of garbage. They've been doing too much planning way ahead of time before they ever decided to have anybody out there to look at it. We were the first people to ever go out to their factory.
Are you a little afraid that with some of these homes, people are going to use them mainly as like ADUs and then start just charging rent for those types of things? Or are you seeing people actually purchasing plots of land and using these as like their primary residence? I guess it's hard to say. It's kind of like speculative, but
I don't care. I mean, like the thing is like, the world that we live in is too expensive. And a lot of people, younger people, can't afford the rent that's out there today. What people pay in rent is double my mortgage. Like I wouldn't be able to afford a average 3-bedroom, 2-bath house, to rent. I couldn't afford that rent. I'm lucky enough to have a fixed rate mortgage that allows me to be able to afford the house that I have. So if my kids are struggling to find a house or something to live in, and I have a piece of property where I could put a nice, modern little house for them to live in, and them be out of my hair and I'm out of their hair, so be it. So be it. And like, remember, like a lot of elderly are not going to have enough money in retirement to be able to either live in a home that takes care of them, but they want their independence, because those homes that help, elderly people, not the ones that are like full on nursing homes. I'm talking about assisted living homes. They're very, very expensive. And even though this elderly person might have sold their house, it probably isn't going to be enough to cover how much, it's going to cost them over the years. They're going to tap out. So more and more people are opting to put these like ADUs in their backyard to help take care of an aging parent. At some point, some people are going to use them for rental properties. I don't see anything wrong with that either. If you're not building enough homes in your area, affordable homes, and you have a backyard, and this is a way that you could supplement your income, then do it. Find a way you can do it. I don't think there's going to be a lot of people though that will want to have strangers in their backyard. But it's possible. It could happen.
Is this Eddie telling us to answer this question here?
Yeah, that's a question. Is the beginning of the next subprime lending debacle? Is this the beginning of the subprime lending debacle? I don't think so. But you give me your take on it, and I'll give you mine.
Sure. I don't think so. I'm first kind of curious. Who asked that question? Island?
Yeah, Island
Nights. If you could let me know, like, what are you seeing that's making you think that? Because I'm not really seeing any products or any trends in lending that would indicate that. If anything, lending right now is actually tighter than it has been trending upwards over the past, really since the 2008 crash when everything unfolded. Because my experience is, our team as loan officers is we're fighting guidelines all the time to get people qualified and to be able to prove that someone has the ability to repay. And so I'm just not really seeing any evidence of there being subprime loans. Now, there are a small percentage of loans that would be non-QM, and a lot of people kind of equate non-QM with subprime. And these are loans where things like, think of let's say a real estate agent wants to buy a house. But they write off everything on their taxes. So up to the IRS, it looks like they make maybe $20,000 a year, but their actual take-home pay maybe is closer to, let's say, $100,000 a year. In those cases, there are loans called non-QM loans, more specifically where we would take a look at an average of their bank statement deposits. And then when we'd use an expense ratio that would reflect closer to what they're actually earning. So we might take 90% of their income. Are you not familiar with these?
I'm thinking, like, to me, that just seems like a recipe for disaster. You're going to qualify for this loan, and you've told the government you only make $20,000 a year, but all of a sudden you're being able to buy a house. I think that's just red flag for IRS to audit your rear end.
Oh, yeah, that's a whole different thing. I can't speak to the tax and auditing liability, but initially people kind of get scared by these loans because they're like, well, this person clearly can't qualify. When in reality, it's just that qualifying or what you want to show the IRS and what you actually are getting taxed on is likely different than what your actual income is. Most people, their taxable income is significantly lower than they actually get to take home, right? I write off a lot of taxes. I also take the standard deduction, but that's not what I actually have in controllable money in my account. It's just what to the IRS my taxable income looks like. So that though is such a small percentage of mortgages in the US. And also those types of mortgages existed pre-2008, and those were not the cause of the 2008 crash. It was really a lot of effectively appraisal fraud, and then also income fraud, along with people who were stretching out their income with adjustable mortgages with very little qualification standards.
Yeah. Remember the stated income loan? So you could just basically say how much you made. You just state it. I made
Yeah.
$320,000 a year. Are you sure about that? Yeah. Well, here's my bank statement. Here's some pay stubs. Here's my phone bill. They go, okay, and they just make mortgages. They were giving everybody a mortgage. You get a mortgage.
Yeah.
You get a mortgage.
I think when that was happening, I was like probably 10 years old. So I was
Oh,
not
well,
in
I remember that back in my day, that's what they used to do, and that's how we got in that mess. But no, but they don't have those kinds of loans. And so like
Yeah.
you're thinking about the subprime debacle, it just doesn't exist. That loan package, even though that it's still available, you can do those kinds of loans. You have to have impeccable credit to be able to qualify for those subprime mortgages.
Yeah.
They're not giving it to everybody. You got to walk a very thin line. So
Wait,
anyway.
Kevin thinks I'm an AI. How do I prove I'm not a robot?
I don't know.
What do I need to do?
That's what a robot would say. I don't know.
I'm actually passing the capture right now.
I think it's because your lens, your camera work is so good. It looks like TV-esque. You're too
Here, look, we
professional.
can turn off the light, and
Yeah,
AI
there
can't
you
do
go.
that, right?
Mike says, who can really afford a $300,000 to $450,000 home right now? Average income in the majority of cities is $42,000 a year, and jobs are decreasing daily. What is the financial secret to wealth? The wealthy know. Oh, okay. And Mike, I talk about this on my channel all the time. The average American home, or the median income home in the United States, most people can't afford because they don't have their median income doesn't cover what the median price of a home costs today. That's a major problem. We in the United States are short, and it depends on the statistic you look at. The national home builders say we're about 5 million homes short. The National Association says National Association of Realtors says we're just under 7 million homes short. So either way, we're short because we haven't been building like we did after the last Great Recession. Builders said, no, not going to do it, not going to overbuild. And so it's put us in a predicament that we've had a shortage supply of homes. And that's why you haven't seen home prices tumble like all the crash bros promised you. Like, we're going to see an epic crash like never before. 2023, it's all going to crumble. I don't know how many times I saw that. Like, here we are in 2024. Home prices have not fallen. Some areas saw a correction because they were overpriced, but they also had a lot more construction in their area. For instance, Austin, Texas, they had a lot more new construction than they did in other areas. Even Phoenix, Arizona had a lot more new construction than like Baton Rouge, Louisiana. So we saw some corrections in there, but we never saw home prices crash, meaning that they were never at the prices that they were in 2019. Those prices we'll never see again unless we see a financial disaster like people losing their jobs at record numbers. But even during the last financial crisis, where we had the wacky loans, people were being foreclosed on all the time. All of that was happening. People were losing their jobs. Home prices never went back to the home prices they were in 2006 or 2005. They never reached that point, even in home markets that were tumbling like a pile of rocks. I lived in Orlando, and my house never dropped back to that $135,000 when I bought it at. The lowest it went down to was $185,000. I sold my house for $220,000, and the lowest it went down was $185,000.
I can speak to that question too, Mike. I hope you don't feel like there is something that you're doing wrong, because I know a lot of people feel that, where they're like, I'm making around the median or the average income in my area, but I still can't afford the $300,000, $450,000 home I'm seeing other people do. You would be amazed to see the loans that I see all the time, or the applications I see all the time. People are stretching themselves to the absolute maximum.
Yep.
Right. So if we're talking about a conventional loan uses a debt to income ratio to see how much mortgage you can get. And that will go all the way up to just under 50%. So somebody who has no debt and has a high credit score, they could use 50% of their pre-tax income to go towards a mortgage payment. Meaning if that person made $5,000 per month, they could take on a mortgage payment of $2,500 per month. That's allowable on a conventional loan for the best qualified person. So you're adding on utilities into that as well, general home maintenance. And then let's not forget that person's not getting $5,000 a month. They're getting, they have taxes they have to pay that on that as well. So it's an even higher percentage of their net income. So you have a lot of people who are really stretching themselves to buy a house, but there's also a lot of people who are in. They have dual incomes, and usually they're both high earners, and so there are a lot of situations and where we're seeing those people are purchasing these higher priced homes relative to your area, and so buying as a single person, it can be really difficult, or buying with maybe average or lower income can be really difficult when you see everyone else who's purchasing 300 $400,000 homes.
Somebody said they pulled out of their investment with the other company. Yeah. I was on wait list for
Because of the
years and then I
stream.
bailed last year. They're talking about
Last year. Okay, good.
yeah. Plasma Bird says, I need to explore other financial options to avoid mortgage companies. Oh, and avoid mortgage companies. The compounding interest rates are beyond criminal. That's your opinion. I mean, there's sometimes I couldn't afford a house if I didn't have a 30-year mortgage. I just don't. I didn't have $275,000 in the bank to cover the cost of what my house was when I purchased it. It just didn't happen. So I needed that 30-year mortgage. Now, a lot of people do the 15-year mortgage, and that's an option if you have that kind of income. But with interest rates the way they are now, they're over 7%. We're going to get into the article. We never did get into that article. We're going to get into the article. But,
I can touch on that too. If you'd like, if we want to go on the interest rates, and then we can kind of segue into the article.
Okay.
I think a lot of people feel like with interest rates increasing, a lot of people, and I know last time I was on the stream, someone brought up like corporate greed and inflation. And a lot of times it can feel like what mortgage companies are doing is, they're just riding the wave and they're increasing rates so that they can make more money. Most lenders are actually losing money and have been losing money over the past few years, because lenders don't make money quite on the interest rate like people think, right? Like your lender isn't just taking the interest and pocketing it and saying thanks. What's happening is your loan gets sold and packaged into like a mortgage-backed security, which
Correct.
then fuels a lot of people's IRAs, pensions, 401ks, a lot of investments. So it makes up a lot of the bonds in the U.S. And so those investors have to be paid. And so the person who's getting the majority of your mortgage interest are actually investors. And sometimes it might be you. If you have a pension, you probably are making money off. Yeah, you're making money off of other people's mortgage interest. And so mortgage companies don't get to collect it. They take your loan. It then gets securitized by a company like Fannie Mae, who you may have heard of, or Freddie Mac. And then the mortgage company makes a small amount of profit on that mortgage when they sell it. It might be a small percentage, will be like maybe 3% of that mortgage, but they don't get to collect the long-term interest. And so mortgage companies, on the large part, are actually losing money on originating loans, hoping that eventually the market's going to change. But that loss can only keep up for so long. That's why interest rates increase, but profitability for mortgage companies doesn't increase in the same way that you might see corporations taking advantage of like COVID inflation, keeping numbers high and then profiting the rest. It doesn't really work like that on the mortgage side. So now
like that guy from Kellogg's,
tee up into the
like the CEO of Kellogg's. I have to tell you, every time I hear Fannie Mae and Freddie Mac, I'm always like, hey, what's your name? I'm Fannie Mae. And he's like, I'm Freddie Mac.
Wait. What is this? What reference am I missing here?
I don't know. Every time I think of it, she's like, hey there, mortgage guy, what's your name? I'm Fannie Mae. He's like, hey there, I'm Freddie Mac.
Freddie Mac's got like a cigar and some sunglasses.
Yeah. That's how my brain thinks.
I'll say, what's going on in there? What's happening in that brain of yours?
Oh, you really don't want to go there.
Freddie Mac is the crooner from the 50s.
Yeah. And she's just a bad girl. She's got her hair tied up in a little, red lipstick.
All right, for Halloween, you go as Fannie Mae and I'll go as Freddie Mac, and no one will understand what we're talking about.
Nope, but it would be a good inside joke for us. Okay, so this is according to Realtor.com. It says this is the magic mortgage rate to rev the housing market back up. Because if you don't know, a lot of housing markets across the United States are at a standstill. because we don't have enough supply. The home prices aren't tumbling down like people are expecting. So, because there isn't an over amount of supply that's on the market. So the housing prices aren't coming down. And the other thing is that in order to increase that number, they need mortgage rates to come down. So many Americans believe homeownership is still achievable. That is, if high mortgage rates fall, according to a recent survey from Realtor.com. The magic rate is in the 5% range. According to the survey, about a fifth of Americans, 22%, hoping to buy a home in the next year would consider it possible if rates drop below 6%. And about a third, 32%, could make it work if rates dropped below 5%. And I wanted to ask you, because I've been hearing this 5% for quite some time. It seems more feasible. Like for somebody, let's just say somebody had a 3%, they were kind of on the fence if they wanted to move. It seems like an easier number to adjust to leave your house at in the threes to go to the fives. It's like, it's not that painful of a difference in a payment kind of thing, like it would be if it was at 7 and 8%. Do you think that is the magic number? Do you think it's 5%?
I think it's 5%, not from what it does to the payment necessarily. So, yeah, having a 5% rate is going to lower the mortgage payment. I think 5% ish is really a better indication of a healthier economy, or at least a healthier mortgage and bond market. Because normally, when we see like a healthy economy, we see that mortgage rates tend to be around 1.75% higher than the 10-year US Treasury. And when it gets higher, like it is now, when we have a higher spread or higher margin, it starts to indicate there's something not good going on, which we know is true because of inflation and also the Fed rate hikes and also the intense government spending. Like there's a lot of issues that are causing this to be in place. So you have that along with, I think it was just shy of 90%. It was like 88.6% of people of homeowners have below a 6% interest rate. So when interest rates do lower, I think that we're going to see inventory increase and also competition decrease, along with home prices maybe probably not dropping, but getting down into maybe a more realistic level for people, because you're going to have people who feel kind of locked into their home with like golden handcuffs with a super low rate, starting to be able to feel more comfortable moving into a different home, because they're not going to be jumping up to a 7-8% interest rate. So I think those two things are probably going to cause a lot more movement in the market, rather than it just being 5% feels like a more affordable number. So it's going to be easier for people.
The only concern I have is that we have a lack of affordable homes in the United States. I mean, like they haven't been building those standard 3-bedroom, 2-bath type houses, for quite some time in a lot of areas. Those smaller houses, like where, like the 50 style house, like they're 2-bedroom, 1-bathroom, or a 3-bedroom, 1-bath, like those tiny homes that would usually be like your first time home buyer,
Yeah.
I haven't built those.
Wasn't it Austin that was making those like shotgun style homes that were super tiny that were like $150,000?
That was San Antonio. That was
San
in San
Antonio.
Antonio.
Okay.
Yeah, that was in San Antonio. That was by Lennar that was making those, and they were asking a pretty penny for those. Like I think they were asking like one at the time. I think it was like $230 for those little tiny houses, and they were like less than 600 square feet. I'm like, and the lot was like a postage stamp. They were dropping like a rock the last time I checked.
Yeah, I'm looking at it now. Like this looks like something like my grandpa built as like a little like kind of, well, I would say like a little kid's playhouse, but he did an intense version of it because he had too much time on his hands. But it kind of looks like that size.
This is a great comment. Said, question: don't home builders offer financing? So seems they could put the mortgage companies out of business with unbeatable interest rates. So there's always something for somebody everywhere. Not all people are going to want to work with the typical mortgage broker, but if you're working with a builder to get a better mortgage rate, you are still working with a mortgage company. Let's just say you have a DR Horton real estate agent. And then you have a DR Horton, the builder. Then you have the DR Horton title company. And then you have the DR Horton mortgage company. all of those things working together in a monopoly type of situation, even though you may feel like you've gotten yourself a better deal, I suggest you really look at the fine print on all of those things, because no company offers you something for free or at a massively reduced amount just for you to use them and not get something in return. They're not,
Yeah.
they're all comes down to the bottom line. So just be very careful about that. But yeah,
One
builders
to
right now are offering a lot of really great incentives. And sometimes
the
you can compare with another mortgage company and you might get the same exact deal.
the incentives that people get with working with a builder's lender, and I will clarify too, like the builder isn't a lender, but the builder often has a lender that either is kind of like a sister company or owned, or it's a joint venture in some way.
Good
Um,
call.
and
You're right.
often what's happening is that it's not that the lender itself is offering you a really good deal, because the lender without the builder's incentives really wouldn't have that much to offer. They'd be competitive with every other mortgage company. But what
Mhm.
happens, and I don't know how this is legal, eventually this is going to catch up to the CFPB and they're going to do something about it. But so you have the builder and then you also have the lender. The builder is the one who gets to set the price, right? And they
Mhm.
can kind of set the price out of the air. And so if they want to increase the value of the home or the price of the home by, let's say, $10,000, they can do that. They can increase the price. And now there's a little margin in there. And then what they can do is they can, with the lender, say, if you work with our lender and no other lender, we'll give you this $10,000. So they give it over to the builder as a credit to you. And that's
Mhm.
how the builder then will pay down your rate with points. So it's not that the lender is offering you a good deal, it's that the builder is offering the lender money for using that lender. Now, the
Mhm.
reason why I say I don't know how this is legal. And with that too, like it's legal for home buyers. Like you have no worries there. It's more of I think lenders and builders should get in trouble for doing this, because if I took my home and listed it for sale and I said, if you work with our mortgage company to buy my house, I'll give you $10,000 off the price of my home. But if you work with any other mortgage company, I won't give you any credit. That'd be insanely illegal. Like
Well, that
there are
goes for title
several,
companies too. That goes
yeah.
for title companies too. Like there are many builders who own title company offices and they'll say, we'll give you $3,000 if you use, we'll give you $3,000 in closing costs if you use our preferred lender, who they happen to own. The builder owns the title company. And I've seen it here in our area where the title company, closes these houses in a new neighborhood. In the future, something goes to close, they find out the survey was wrong and half of this person's house is in somebody else's property. So they have to cure all that title work right there at the front of the neighborhood because the title work was never done right in the first place.
Yeah. And all this is, I just want to cap this off too with like, if you
Mhm.
are buying new construction, check out the builder's lender. There's no concern or issue with you doing this.
Right,
And most
absolutely.
people, like whenever someone comes to us and says, hey, can you beat this builder's lender's quote? Normally I don't even have to look at it. I just tell them it's likely going to be way better. Cause I don't have extra money to pull from. I can't pull money from the seller like the
Matching
builder's
money.
lender can.
Mhm.
So take advantage of it. Absolutely do it. Just eventually, as a loan officer, it's annoying because it shouldn't be illegal because no one else is allowed to have this special provision. But you as a home buyer, absolutely take advantage of it if they're going to give you a credit for it.
Sometimes though, like our little local builders, even though they have a preferred lender, if you say to them, "Look, I've been working with this mortgage guy for years. I really don't want to like lose the deal because of this. I want to still have the incentive." Sometimes the builder will go, "I don't care. Yeah, go ahead. Go with your guy. I'll give you the same kind of credit." So it doesn't
Mhm.
hurt to ask. Doesn't hurt to ask.
Yeah.
Beth R has a question. Would this home fall under a 30-year mortgage option? Are you talking about the Zenny homes? Which home are you talking about? If you're talking about the Zenny homes, yes, they'll fall under a
Mhm.
30-year fixed rate mortgage. They can be approved for that. They are built to International Building Code. And if that's what you're talking about, yes, they will fall under a 30-year
Some
FHA mortgage.
someone had a question about 401k if they should pull money out.
People have done
You
that.
think you think that would be a good one to talk about?
Sure.
I can touch on it real quick. I would
Mhm.
not pull money out of your 401k. Because you're going to likely trigger some penalties. But you can
Mhm.
do, if you have no other option and really want to buy a house, you can do a 401k loan. The
Correct.
loan doesn't count against your debt to income ratio, but please if you're going to do this, make sure that you're either have a plan to put that money back into your 401k, because it's going to pause your ability for that 401k to grow wealth over time, and it may slow down your retirement progress. So if you can find any other option to reduce your down payment or closing costs through different programs or seller credits and things like that, if you absolutely need to, do a 401k loan instead of pulling it out. But please have a plan for your retirement. Don't hurt your long-term goals just to buy a home right now.
Jeff Ramos, the $5 Canadian dollars. Thank you so much. Kyle and Kristina, your opinion on realtors.
What was that? Wait.
That's my sound effect. One of my subscribers made that sound effect.
Oh, really?
Yes. Yes.
Is it like, what's the sound in the beginning? Is it like,
it goes, it's like a little like super chat. Thank you.
Man, I'm gonna have to get one of those.
Yeah, well, you have to ask your subscribers to make you one. They'll be surprised at what you get in the mail. So he says, what's your opinion on realtors' fine and judgment by the U.S. government for fixing commissions? My opinion is this. First of all, it wasn't just the National Association of Realtors. It was, I don't know if you've heard about this, but it was a bunch of different large firms, they say, were in collusion with one another to set and fix the interest rates for like the amount, the interest that the percentage that would be for a house. They said that they colluded to make it 6% in this specific area, that they all like basically had a sit down lunch and said, okay, everybody agrees we're only going to take 6%, not a penny less. The lawyers that they hired to represent those companies were really honestly the most pathetic lawyers. They really didn't do any favors. Us as real estate agents, we pay a hefty fee to the National Association of Realtors every single year, and they support all sorts of bills that protect real estate agents, but they didn't do it for themselves. And in the long run, then they lost all this money. But here's the thing: it's going to depend on the state. I think when it comes to those fees, the buyer's agent, the buyer, is going to have to figure out a way to pay the commissions to have representation by a real estate agent. If they don't want to have a real estate agent, you don't have to. But even before this lawsuit and even after this lawsuit, real estate commissions have always been and will always be negotiable. I don't think that was ever clear enough to the public. And I think that's the biggest crime of all of this, is that I've been saying it for years, that real estate commissions needed to be clearly stated to the public and that they are negotiable. It was never brought to the public's education about real estate commissions enough, because somebody walked in the door and they said, yep, that's what we charge, 5%. I'm not going to take a penny less. Now, a real estate agent can say, I'm not going to take a penny less. Doesn't mean you have to work with them. And I think that you're going to see a lot more, discount brokerages and stuff like that, but they've always been around.
Are you seeing any a lot of pushback after this ruling where sellers are starting to change the commissions that they're paying out?
No.
I haven't heard. I feel like I haven't seen anything about actual home sellers changing this.
Now, I've seen around the country, I've seen purchase agreements, the verbiage in purchase agreements change. But if the purchase agreement didn't change or the listing agreement didn't change, they came up with a new addendum to make it clear to both sides that, this is what I, as an individual real estate agent, am going to charge both the buyer and the seller's agent. I'm letting you know that's what our commission is going to be. At any point, if anything happens, those commissions are negotiable. Sign here. I mean, that was never made clear to the public from the get-go. And I think that's why this has it's gotten to as far as it did down the track.
Okay. Yeah.
Yep.
How do you feel about the buyer agent? Do you ever see a transaction fee or an admin fee that buyers agents will charge, or be a couple $100 on top of the commission that the buyer's agent is getting?
I've seen it on the buyer's agent and the seller's agent. I think the fact that they are charging their customers more money on top of the commission I think it's gross. You're always going to have gross people that just trying to, like, they basically want to work for free. Like they don't want to be inconvenienced in any way. And there's a cost and a price to being a real estate agent. There's things that you have to pay for. You have to pay your desk fees. You have to pay your phone fees. You have to pay your paper fees. And you can't, in my opinion, if you're a good real estate agent, you shouldn't have to throw that on to the customer on top of the fees that they're already paying to purchase a house. To me, that makes you look like a greedy a-hole. Proud Liberal 24. What are the terms of construction loans? What are the terms of construction loans in comparison? Because, a lot of people, they start with their brand new construction loan as they're building their custom home. And then afterwards it rolls over into a conventional 30-year fixed rate mortgage. So what's the difference?
Oh, I'm glad you clarified that. Because in my mind, I was hopping this on to like new construction that we were talking about before. Because if you're getting like new construction, it's exactly the same as a standard conventional home loan. We don't really do construction loans, so I'm not the most well-versed in construction loans. There are a couple different types of construction. You have one-time close loans, which are more common on like FHA and VA loans, where it's basically one closing, so one set of closing costs, and then you do one closing, and that's going to fund all of the building. A more standard conventional construction loan is going to be basically you have the construction loan, and then you have an end loan. So you have to do the construction loan up first to fund the construction, and then at the end, it effectively is kind of doing like a refinance to go into a long-term loan. So the one-time closes are nicer, but they're not always super feasible.
Right.
Someone had a really good question. Charita, about realtor commissions. Or
we'll go back to her just 1 second. Beth has got her question first. Eddie, can you put that one from Beth real quick?
Sorry, Eddie, I don't mean to be
you were trying to like, hey, Kyle, this ain't your show. Back up.
You're right.
Beth R said, what would you what would I have to look for in land to have multi homes to build on it? You have to look for you got to look for the zoning. So if you're looking for the zoning in that area to have multiple homes on it, for instance, like residential is not going to allow you to have multi housing, but if you live in some areas like in California, they will allow for an ADU. You're going to want to check with your planning and zoning in the area you're planning on building to find out what their building rules and codes are and restrictions are. That's what I would do. Okay, so this is the next question, the one that Kyle ordered us to put on the screen.
It was pretty aggressive ordering, wasn't it?
Yes.
I'm back here.
Put it on the screen, Eddie.
Better
now.
Put this on the screen.
Realtors say commissions are negotiable. However, they aren't. I've spoken to several different realtors, and they won't budge from 2.5 to 3%. How is that negotiable if they won't negotiate? Okay, so as a real estate agent, you have the right to say, no, I'm not doing that. You have the right to say that. That's their business. Every single person works at their own way, right? Every single person. Even though the name behind them may say Remax, Keller Williams, EXP, it doesn't matter. Each person is building their own business, and there might be a hard line in their own way they do their business that says, I will not take a penny less than 2.5%. That may be them internally. That doesn't mean that, and I've seen this happen so many times in my career, that you're in the heat of a house about to close. We get to the inspection period, and there ends up being so many things, and the sellers just do not have enough money. They are strapped, and they're like, okay, look, I need another $1,200 in order to get this to close. Like, I can't fix everything. The real estate agent on both sides negotiates their commissions to take off, so that way it will close for the seller or for the buyer. We have take away from our commissions all the time to get deals to close. So the starting point might be 2.5% on each side, but that doesn't mean that's what's going to happen in the end, because we're trying to get the thing to close, and we allow for our commissions to be used to allow that to close.
Yeah. So, I've seen a lot of agents do that when it comes to there's some issue with an inspection or an appraisal issue, or
Mhm.
and yeah, you have both the seller who's like, I'm not going to do anything, and the buyer's like, I don't have any money to do anything. And often I'll see an agent come in and be like, we'll just take care of it to make the deal happen,
Yeah, we'll split
which
it.
makes sense.
We'll
Yeah,
split it. Well, it's $3,000. We'll split it, and it's
yeah,
$1,500 off of each one of our commissions. We do it all the time. I mean, you do
yeah.
that to get it to close. The buyer gets to get the house that they want, and the seller gets to really, that's just part of it. Part of it. Yep.
Since I'm running this live stream now,
Mhm.
uh, Eddie, I'm glad you put that up there because I was going to tell you to put that up there since apparently I'm in control. Wait, this says let's celebrate their 20th super on a live stream. Does that mean the 20th super chat?
Maybe.
Wow, that's
Betty
awesome.
Boo Betty Boo has a question though. It says, "Do you think small landlords will be taxed more due to holding more homes?" I, there's all these bills that have been thrown around by all sorts of congressmen, senators, all sorts of stuff. I think that small time investor that owns like less than 15 homes, those ones aren't going to necessarily feel the heat like the large investors. But large investors are not stupid. So they'll just create all these shell companies to skate around having to pay that, whatever that tax that's being proposed. A lot of times when you see these things that are these bills that it's just to make the public feel like they're doing something. I don't know how many people heard back, and everybody I know heard this. Remember when the time change? Everybody said, "Oh, I thought the time change ended. I thought the time change ended. Like I thought we weren't doing the time change anymore." It passed the House. It's been sitting on the Senate floor
Hmm.
for 3 years. They just want us to suffer with that daylight savings time. Just pick a time
Maybe.
and stick with it. Like there's no reason to even have it anymore. It
Yeah,
messes
wasn't
with
it an
everybody's
old like
rhythm.
farming thing?
That's what they said, but it was all about us buying more crap. There was a study
Mm,
that found out that if you adjust the time, the people would stay out and buy more garbage.
really?
Everything comes back down to capitalism. That's that's why we do have the stuff we do. Beth P says, Kristina, do you see the article about the Georgia State University last week that had 3 corporate landlords owned over 19K in rental homes in Atlanta metro area using the 190 LLCs. Now, researchers find that 3 companies owning more than 19,000 rental homes in the metro Atlanta. Do you know who know this? Is Clark the Realtor. He's in the chat. Yep. 3 corporate landlords controlling 11% of single family homes available for rent in metro Atlanta's core counties, according to new analysis of Taylor Shelton at Georgia State University. Shelton, the assistant, whatever, along with his collaborator Eric, investigated ownership of rental properties in the metro Atlanta, found that
Hmm.
more than 90,000 were owned by just 3 companies. This is so true. And if you let those 3 companies, by the way, those are 3 companies, but those 3 companies CEOs sit on the boards of all the other companies. So Invitation sits on the board of Amherst. Amherst sits on the board of Pretium Partners. If you don't think that they're going to dictate and control what's going on in a housing market, these companies own tens of thousands of properties and related to select set neighborhoods. So they know they're trying to control a specific amount of homes in that area. I'm going to make a video on this. Thank you so much for sharing this, which allows them to exercise real significant market power over tenants, renters, because they have such a large concentration of holdings in those neighborhoods. Metro Atlanta is facing an affordable housing crisis. Corporate landlords may be one of the reasons for that, according to the fellow GSU researcher. What were you going to say? What is it, Kyle?
Oh no, I don't have anything. Nope. I was just sitting back. I'm absorbing it all.
Yeah. I've been saying this for years. We got to stop. Like corporate landlords are killing affordable housing, killing it, because anything that was affordable in your area, is being scooped up by corporate landlords. And they always like to go back to this old statistic from 2017, and they say we only own 2% of the market. We only own 2% of the market. No, you don't. No, you don't. You're a big fat liar. We know that you're lying. And then super chat. Thank you. And then they want to say, well, it's really not us corporate investors. It's the small investors that are really ruining the housing market. They always like to throw us under the bus for all sorts of crap, but it's them. The corporations are making us sick. They're taking our money and then they're trying to divide all of us. But, it's always our fault. The whole reason why there's tainted water, there's whole reason there's tainted water is because of, you boiling too much water on the stove with your gas stove. It wasn't them dumping chemicals for the last 10 years in the lake. No, it's your fault. That's what they do.
Every time I make pasta, I just feel the guilt overcome me.
Yep.
Can't
You
boil
boiled
water
that.
without it.
Yep. $5 super chat. Thank you so much. It says, you think they will ever bring back $1,200 mortgages back rather than the $2,300 a month? Well, I mean, that depends on interest rates in the housing market in your area. There are some places in the United States. Nobody saw this video last week. I'm sorry, I shouldn't say that. There was only for a video on my channel. It didn't do necessarily the best, but there are places that you can find homes that are under $230,000, and not every single one of them, or even 200,000. And not all of them are like, people say, well, yeah, I'm sure they're dumps. No, they're not. Like there's some in really nice areas. You just have to go out there and look. And if you have a job that you can do remotely, just go out there and look for them. Go out there and see what else is there.
Most of the homes here where I live are under that cost too. People say the same thing. Like, it must be a dump. No, I have a decent house. And all the homes around here are fine. And like live within an hour of like 2 big cities. Its cost of living's low. It's a great option.
Vince with VCG Construction with a $10 soup chat. Just want to say thanks. I wish I was Thank you so much. Thank you, Vince. I appreciate you. I stopped by his live stream today. I hadn't seen him in a while. I miss my friend Vince, my YouTube friend. We used to commiserate about YouTube all the time. I call him on the phone. I'm like, what's going on? He's like, I don't know. Let's look.
Was that another viewer who made that super chat sound?
Yes. Yeah. All the super chat sounds you hear are made by subscribers to my channel.
What? Super chat?
Yeah, I just asked.
God.
I have the best live stream audience on YouTube.
I'm learning.
Yeah, they're the best. I really do have the best. That's why I have really good questions too. They always come in with really good, pertinent questions to what's going on in the housing market. They're super educated. I have to say I have the best. You may have an audience on your live streams, Kyle, but I have the best audience.
I believe it.
Mr. Byron says, question, 50% of their income to qualify for a mortgage. Is that way over the 30% to make more sense? Isn't it like, didn't it used to be like 32% of your income couldn't be for
there's always been this thing called a QM rule.
Yeah.
That basically after like the 2008 housing crash, the CFPB came in and said that everyone has to have a qualified mortgage, meaning that your mortgage is basically, that's where like the 36% number came from for debt to income ratios. But
28, that was it.
That has almost always had what's called a QM patch, where the governments have basically said, hey, Fannie Mae, Freddie Mac, it's actually fine if you go above this. We're just going to put a little patch in this law, and we'll see if we ever get back to it. And so there was some fear of that. The QM patch was going to expire a couple of years ago, and that ended up getting, I don't know the right word, lengthened, extended, whatever. So even though that's technically a law, there's also another law on top of it says that that doesn't matter anymore. So no, 30%. A lot of people.
They can stretch. They're going to stretch themselves thin so they can be house poor.
It's an interesting, like, ethical question of like, should the mortgage company be the one who decides what's a comfortable payment for you? Because there are situations that I've seen with a lot of times where we might have somebody who they started their business a year ago and they're making a ton of money, but on paper, the only thing that they can show is that their spouse makes $30,000 a year. And even though the other person on the loan made $200,000 last year, has plenty of income to be able to afford a $2,000 per month mortgage, on the mortgage, on paper, we can't qualify with that income. And so having that flexibility is helpful in those situations. So it's always kind of, for me, it's an interesting ethical thing of like, who should be the one that determines your budget? Do you really want the government being the one who tells you what you should take on a mortgage payment? And if so, to what degree do you want them to be kind of in your budgeting circumstances.
But in the same thing, in that same breath, I want you to turn around and take a look at what happened in 2008 when people would just state and lie their income to be able to get a bigger house because they thought, well, that's all right. I'll just hold on to it for 6 months because it will increase, 20%, and then we can sell the house because they were using real estate as like a lottery ticket.
Mm-hmm. Yeah.
People, like lenders can't be trusted. No offense to you, but their lenders can't be trusted to tell people, don't worry about it. You'll be fine, and that they're going to
absolutely. Yeah.
Qualify the right people for those specific types of loans. They're going to take advantage of it because they're going to want to sell more loans. That makes me sad. But the thing is that even still, though, the qualifications to get any kind of mortgage, you still have to go through a lot more than the typical person. Like you can't just can't have a crummy credit rating. Like back then, you could have a 500, 575 credit score and still be able to afford a house. Like those don't exist.
Yeah, I've told people since I started working in loans that no matter what maximum we can give you or the maximum that you qualify for should never be something that you consider for what actually is comfortable for you. The number that's comfortable for what you're going to take on in a housing payment should in no way be related to you qualifying for a mortgage. It should be completely independent. I think people should have that number down before they ever get approved for a loan, because you should not be getting information on what can I afford. To me, it's kind of a strange question to ask anybody else that doesn't know your budget. What can I afford? Well, it's really, you're the one who lives in your budget. You know your goals, and no other person, no financial expert is going to be able to tell you what's comfortable for your budget. So that's why I think it should be in the hands of the buyer on what's actually affordable for them. But yeah, I do also agree that unchecked, a lot of people can take on things that they, that may be damaging to them long-term. It's just kind of hard to figure out where's that line in which lenders should be able to tell you how much you take on.
Well, because the mortgage brokers are salespeople too, oh, by the way, did you see that one state? Oh, Eddie, I don't know if you can find this. So I don't know which state it is, but you remember when everybody was saying date the rate, marry the house, or marry the house and date the rate, which I hated more than anything. I thought that was the dumbest, let's just break down complicated mortgage, details into this little thing, this little meme that we can send around. It's so cute. Well, one state is suing the mortgage brokers that were using that in advertising.
Really?
Yeah. I got to, and you can pull that up for me. I saw that on the Bearded Men of Real Estate. Have you ever watched that This Week in Real Estate with Ray Allen? He has a podcast. It was a couple weeks ago. They talked about that. And I was like, oh, I knew they were going to get in trouble for that. Because I would love
to know about it because I can't find anything.
Anyway, we can be able to find it. It says, MH08 says neighboring house just sold for $250,000. New owner is doing a reno. Looks to the tune of $100,000 to be a rental. Is that a 1% rule thing still for rentals? Is the 1%? I mean, every investor has their own rules. I mean, a lot of them are trying to. Depends on how good of an investor you are. The 1% rule is still a thing, but some investors do their own thing. That's for sure. Yeah. So like, I thought it was dumb to just tell people that because you never knew what rates were going to do. So who's to say, that rates are going to be fine in a few years when you went to go refinance? They could even have been higher. I thought that was a dumb thing to say.
It's a bad planning strategy of assuming that, I'll take on a high payment now, because it encourages people to take on a higher payment or something that they're not comfortable with now in the hopes that it's going to lower. And I think everybody should expect that even with a fixed rate, your monthly payment's going to continue to go up because taxes go up, your insurance is going to go up. And so I had a friend text me the other day and he was like, I just noticed my payment each month over the past 3 years has gone up. He was like, in 2021, it was $1,600. Then it went up to $1,700 and now it's almost $1,800. He's like, did you know this? Like, yeah, taxes and insurance go up. This is not a new concept. But I think people can forget that those things, your mortgage payments going to continue to go up because of taxes and insurance.
Well, insurance has gone up so high too. Like mine doubled. My insurance doubled. It went from $2,000 to over $4,000.
Is that because of the hurricanes?
It's because
Or
because insurance companies are greedy jerks. That's why. I
mm,
mean, honestly, I
okay.
would just went with another insurance company and got it back down to, it wasn't back to where it was. It's only gradually higher. But
Okay.
they got to pay those CEOs though, $30 million a year in order for them to do their job. So they got to get that money
Yeah.
somehow. Might as well stick it to the little guy. But they
Mm,
blame us.
yeah.
They blame us. We made too many claims. We made too many claims, and now they're having to double it. They couldn't.
How many claims did you make?
A risk assessment company did not know that there were bad weather would come down the future, and they
Yeah.
went ahead and it's too much for us, and we're just going to go ahead and double it. You couldn't figure that out. You didn't know whether for the last 20 years since Hurricane Andrew, matter of fact, so that's last 30 years, you didn't know that there's been more hurricanes and more tragic weather. You risk assessment company, you can't figure that out. Like, I don't know.
Yeah. Isn't that
Home insurance companies are raking us over the coals, raking us over the coals.
Is that still a problem in Florida with a lot of people finding difficulty getting insurance?
Absolutely. Yes. And there's some people that are forced to sell, some older people, because their insurance went from because they're close to the coastline, they were paying about $4,000. Now it's $16,000 a year on a house they've had paid for the last 10 years. They can't afford it. Can't afford it. So a lot of them are either choosing not even to have insurance. They're like, whatever, I'll just pull it out of my own pocket. I'm going to risk it. I'm going to do the hope and prayer insurance.
And JM, are you considering just don't insuring your house then? Have you considered that?
I can't with a mortgage. So if you have a typical mortgage, you cannot just say, you know what, I'm not going to have home insurance, because really, honestly, you're renting the house from your mortgage company until that sucker's paid off. And the mortgage company wants to protect their asset. So if you try to drop your insurance and say, well, I'm just not going to pay it, guess what happens? Your mortgage company decides to tack on an insurance for you. And it's really crummy insurance, and it costs a whole lot of money. So don't do that. Don't think you're going to get away with that. Kelly Hahn has had our questions sitting on the screen. Let's go ahead and address this. So would multifamily homes help, or do people need to learn to live with each other? Yes, multifamily homes would help. Townhomes would help. More modular homes would help. Any kind of home that is affordable for people to get into, to enter into real estate, would really help the affordability crisis. Absolutely. Yep. Gus Pekka has a
super chat.
Thank you. He gave me a $2 super chat. Thank you so much, Gus. I appreciate you. You're amazing. Gus. I like that name. Jump on the Gus bus. Don't need to discuss much.
I think at some point you need to start your like a singing YouTube channel.
The thing is that my brain, I cannot remember anything I'm supposed to do during a day. But if a name pops up, or some kind of situation where a lyric to a song comes up, I will just belt it out. Like, yeah.
It's just stored in there. It's filed under
stored
there.
in there.
Right next to Fannie Mae and Freddie Mac.
Yep. Useless information. Never going to serve me anything other than making people smile and laugh. So whatever. That works. Because in the world we live in, we all need a little smile. A little laughy laugh. Yeah. Noreen says, what metro area does Kyle live in? Where do you live, Kyle?
I live in Dayton, Ohio.
Dayton, Ohio.
Just like an hour from Columbus and an hour from Cincinnati.
Oh. Do you ever go visit those two cities ever? Like, do you ever go on a long weekend with the wifey wife?
I don't have a wife, but
oh, I didn't know that.
Yep. No, I don't have a wife. I do. Yeah, I visit Columbus and Cincinnati a lot. It's fantastic. It's like kind of right in the center of both of them. So it's real nice. It's only an hour drive. So I don't even have to go for like a weekend. I can sometimes I'll go and like go to work at a coffee shop in Cincinnati and get some lunch and head back. It's a good time.
I do that.
Cost of living is low.
I do that in New Orleans. Like I'll go out in New Orleans and have a good dinner, You get sick of the food in your area. You get sick of the atmosphere in your area. So you just
How far are you from New Orleans?
Depending on what part you want of New Orleans. Like if you want to get into like the real fun with all the restaurants are and all that stuff, it's 45 minutes. But actually to hit New Orleans about 35 minutes.
Okay. Yeah. That's
and then
nice.
Baton Rouge is 25 minutes.
Okay. Wow.
Yeah.
That's nice.
We got another question. It says, what does a seller's agent actually do after listing the home for sale? Marketing? Most refuse to do or discourage open houses. Holy cow. That's when you like, everybody should know this. If you are working with somebody that you're paying them a certain percentage of your sale of your home, I want you to find the agent that's actually going to work for you. I want you to find the agent that is going to use social media to list your home. I want you to use the agent that is going to use video and know how to utilize it in a way to market your home. I want you to find an agent that will do open houses for you. If they're refusing to do that and you don't feel comfortable with that, that is not the agent for you. And I promise you, with every fiber of my being, there is another real estate agent in your area that is willing to do what you would need them to do to get your house sold. If they're too uppity or too busy to do those kinds of things, then that is not the agent you want for yourself. Got a little
I'm just trying to
soapboxy there,
figure out
didn't
how
I?
you can how can you butter honey? Butter honey. How do you do that?
Ladies are right. We could all butter honey with that voice box of yours. Oh, it's because your voice is like moisturizer.
Don't get excited. It's an AI voice. This is not my real voice. I turn on the little AI filter, and this is what you get.
There's a guy on YouTube. His name is Gord Eisman, and his voice, he has a very good radio type voice. And a friend of mine who's from Liverpool, he always says Gord Eisman has a voice like moisturizer. David Mintzner says, why are commissions a percentage of one price rather than an itemized fee? It can be that too. You can do that. An attorney will be unable to help you in the prepare a competitive market analysis report, negotiating for repairs and spot defects. A real estate agent, on the other hand, cannot answer legal questions, and the law forbids them from providing legal advice. But you can negotiate that. You can make it a flat rate. There isn't like there are companies that you can hire today that will say they're called flat fee MLS. Look them up. Flat fee MLS real estate agent. And all they're going to do is list your house and put it on the MLS for a cost. Some of them actually even do some marketing for you where they give you a basic video walkthrough tour, but that's an extra cost. Some real estate brokerages do an a la carte service. You know, you're going to get this, but you won't get this, but then you can add this, and that will be the cost. Just because we say percentage, that doesn't mean it necessarily has to be a percentage. This is way beforehand. I've done it where it was an exact price and it was in the MLS. No matter what the house sold for, we were going to get $3,000 a piece. That was it. And you can do that. Yep. Who's on first says, question, in the UK, Austria has social housing for the middle class. Gardens, pools, high quality housing. U.S. should provide housing for the poor and middle class, remove profit, and create competitive competition for corporations. I'm not going to argue with you, but that is like living in utopia here in the United States. The likelihood that we would have like council housing here for the poor and, like fair housing, affordable housing for the middle class, that dream has gone since since before 2009. Like before 2006. That's never to be seen again.
I think a lot of the problem too with these bigger changes with housing is the US is huge. Like imagine trying to get all of Europe on board with one idea of something. It probably isn't. Well, okay, I guess they did. What's the thing where you can the Schengen area thing? I guess in the EU. Okay, maybe that's a bad example, but it would be so difficult to
Think
get
about
all
it
the
this
US
way.
on board.
How many people could you try to get them back on board for wearing a mask? That's like trying to convince everybody to believe in one thing, and we couldn't even agree on that. Like there's no way.
Yeah.
The United States is huge. Like I get what you're saying, because like like the Netherlands, and they have these community houses, and they kind of treat the public in a completely different way than the United States does. But we're so incredibly vast. Those countries are no bigger than like half of a state here in the United States. Like
Mhm.
whenever I meet somebody that's never been to the United States, they think that they can come to Florida, go to Disney, and then get on a quick little shuttle plane or take a train to go see the Grand Canyon. They don't understand that's a
Great.
13-hour flight to go see the Grand Canyon. And not that it's like when you see it on a map, I don't blame them. When you see it on the map, it kind of looks pretty much the same size, And then when
Mhm.
you find that out, you're like, oh, I see. I
Yeah.
see.
Yeah.
Yeah. Yeah. We have a question that says, how does the average person go about starting that commission negotiation conversation? The minute you meet a real estate agent, the second you come down to them, the instant that they walk in the door and they're giving you their presentation, say, look, I don't want to waste your time and I don't want you to waste my time. The thing is that this is how much I want to pay to sell my house. And if you're not willing to negotiate with me on this price, then I don't think you're the real estate agent for me. That's all you have to do.
Mhm.
And they're going to like the fact that you're upfront with them because that you're not wasting their time and you're not wasting your own time. So I would do that immediately. The minute they sit down. The realtor commissions go to the broker. Correct. The broker has the contract with the sales agent already arranged. Correct. That is correct. And a lot of those commissions that you negotiate, they still have to be accepted by the broker. Every broker I've ever worked with, it was like, it's always up to you. You have to negotiate it just to get it approved by us, but we'll sign off on it. Anything to
Yeah.
get the deal done.
And just one little point on there too: the broker doesn't set the commissions.
No.
What happens is the seller is often the one who, usually on the MLS, you can go and pull it up and see that the sellers might be willing to pay 5% commission, and then they split it up between the buyer's agent and the seller's agent. So it's the seller who does that, and then the broker then can enter into that agreement with the seller and the listing agent on behalf of the broker, because an agent functions as an agent of the broker. But the broker isn't the one who automatically had that agreement set in place. They can always be countered, but the agreement is usually set forth by the seller when it's listed.
Correct. Question: should I use one agent for selling or buying, or a separate agent for selling my house and another for buying your house? That is entirely up to you. Some agents are just really good at one side of a transaction. Some agents are
Mhm.
good at both sides of the transaction. I think the agent that has the most experience always wins. But I've seen agents that really represent sellers really well, but when it comes to buyers, they can't get their brain out of that seller's mindset. So they don't do as good of the negotiation process for the buyer. But I mean, you're just going to have to find the agent. You're that's a
Mhm.
decision for you. Some agents are really good at both, some are not. And I would ask them when you're interviewing them. So if I was the buyer, how would you negotiate a deal for me on a house like this? And if I was the seller, how would you negotiate that same deal coming back around? Like
Yeah.
if somebody came in, and how would you negotiate that deal? Like you give them a scenario and ask them how they would negotiate it. And if you don't like the way the answer, then or you only like the answer for one side, then then you've got your answer. So Mona has a question. Is it common for realtors to offer a commission discount if you use them for selling and buying? No, it's not unusual. It's quite common. Like they'll say, well, I'll drop my fee if you use me for buying and selling your house.
Yeah.
That happens often.
Especially now when realtors are kind of desperate for your business, it's going to be a little bit easier to get that going.
Yeah. And it's not because the housing market is collapsing. It's because no one's selling their house. So you can't take any buyers to go see a house because there isn't any inventory, and
Mhm.
you don't have any sellers because no one's putting their house on the market. So when people say they're like, they see real estate agents really suffering in the last year or two because they're not selling as many houses, that is not an indication that the housing market is failing. It is an indication that the housing market is stagnant. It's stagnant. But a lot of those real estate agents made really poor decisions during that time, thinking that a housing market was going to rise forever. I saw so many people like go ahead and buy the top of the line Tesla, and walk around with their new red bottom shoes, like, come on, you
What's
gotta
a red bottom shoe?
Oh, they're like the high heels they have the red soles on the bottom.
Bottom
It,
shoe.
there
Like what
is,
the Fannie Mae wears. Hey, I'm Fannie
yeah,
Mae. I bought the new
Fannie Mae would be
Christian
telling Freddie Mac that. Did you
Christian
see?
Louboutin
Yeah,
red
Christian
sole.
Louboutin. Yep. Yep. They're like,
Oh, they're not cheap.
no, they're a status symbol. Like and those,
Really?
yes. Yeah. Yeah. They're for the girls. The girls know
Would you get it in blush or black?
I do not care. I've never been a fashion icon in any way, shape, or form. I have always dressed like a 4-year-old toddler. I dress for comfort, not for fashion.
These look really uncomfortable.
Whatever.
Then
I've
again,
had
I've never worn.
I did like, I will say this in my early in my real estate career, I did dress the realtor. I did cosplay realtor for a little bit.
Cosplay as a realtor?
I cosplayed as a realtor, the typical
Okay.
realtor, pencil skirts, high heels, iron shirts. I did that for a hot minute, but it was sweating here in Louisiana, like the temperature alone, like having to do that, you feel like a wet dog all the time. I'm like, nope, I'm going for comfort. Forget this.
Yeah, that's like stock photo realtor to have that whole outfit.
Oh yeah, it totally was. I was like literally, yeah, back in the day. Yeah. If your mortgage company finds out you dropped your insurance, they will force. Yes. Yeah, that's correct. That's exactly what I said. They will force place it and it costs way more. That's exactly right, Dina. That is.
You returned a jar of mayo?
Excuse me?
Debbie said Kristina returned a jar of mayo because it was too expensive.
I did. I
Wait,
was.
When did you realize it was too expensive?
Well, I sent my husband in with a $20 bill and I said, hey, don't, and the chat better leave me alone. I asked him to pick up some Miracle Whip because I love Miracle Whip on a turkey sandwich. And every time I mention this to people, they're like, that's disgusting. That's what I happen to like. So he comes out with my daughter and they sit down there like, whoo, that was some expensive Miracle Whip. I'm like, how much was this? $12.99. I said, you march your rear end right back in there and get me another, like, just get your money back. There's no way I'm paying 12. I don't need it that bad. But we went to Walmart and it was like $5, that grocery store was ripping me off. But no lie, they genuinely were charging $12.99 for, and then we went back thinking it was a typo, right? And even the people behind the counter were like, yeah, I thought that was ridiculous. But we went back like a week or two later, it was still that price. So I don't know if it was a grocery store or Kraft or whoever, but whatever.
I think it's Louboutin mayo, actually. It's got, did you look at the bottom if it has like the red?
Yeah, it had the red bottom of the jar. Yeah, I can correct.
Yeah, that's it. That's the bougie mayo.
Pastor Mac has a really good mortgage question. It says, PMIs, are they for the life of the loan or do they end when the 20% is, like the appraised value is 20% higher? He heard that it changed. So where does that make the difference?
It depends on the type of loan. So a conventional loan, the mortgage insurance, most people don't know this, is actually going to fall off at 22%. You have to ask for it to come off at 20%. On an FHA loan, if you do less than 10% down, it's going to be on for the life of the loan. If you do 10% down or more, it's on for 11 years. So that is probably where you heard the change. It was in if you had an FHA loan that was originated, I believe, before 2015, then that will follow the same rules as conventional, where it can fall off at 22% equity. But that changed in 2015, where it now is for the life of the loan, unless you do 10% down. USDA mortgage insurance stays on for the life of the loan, no matter how much down payment you do. And VA loans have no mortgage insurance monthly, but they do have an upfront funding fee, which is effectively mortgage insurance that's paid up front, financed in the loan amount.
They want their money.
They want it now.
Yeah.
And it's included in the loan amount most of the time. So effectively, it's monthly, but you just finance it over 30 years.
Betty Boo has a question with the Airbnb bust. Will the sale of those homes help with the housing market? So Airbnbs, you have to realize, are around areas that would be considered for tourists, right? Where I live in a very small town between Baton Rouge and New Orleans, the Airbnb bust is not going to make a hill of beans difference. I'm sure in little Dayton, Ohio, it's not going to make a hill of beans difference, but it could make a difference in like a town like Orlando or a town like Austin. But we had Airbnbs here in New Orleans. They nipped those in the bud 5, 6, 7 years ago, they did not allow any more Airbnbs to be, it wasn't a thing. You can't do it. The hotel industry put a stop to Airbnbs because it was affecting their business. And since deeper pockets, hotels, they made it so that you couldn't have Airbnbs. And actually a bunch of condo organizations folded up because investors were buying condos just to turn them into Airbnbs. And the city of New Orleans said, no more, you can't do it. You can't have them. It's going to affect certain housing markets, but it's not going to be across the board, just like across the board problem. Yeah, making a housing crash of 2024. It's all falling down, burn. It's not gonna happen.
Have you seen the headlines with fire and like nuclear bombs? I'm pretty sure that's.
I've done the nuclear bomb one before. I've done that. Yeah.
Have you noticed that all the housing, like the trend with like housing market thumbnails are all like natural disaster related, or it's like it's either a
do you know
tsunami,
why they're like that,
it's a
Kyle?
storm. Did
Do
you start it?
Because people
Are they
click on it.
copying?
They click on it. Yeah, like whenever I put out a video that I'm very passionate about, I will do several different types of thumbnails. And the ones that people click on are the ones that look like absolute doom and gloom.
Yeah.
That's why there's
it's like a terrible sea storm that you see on like Deadliest Catch with like a house like drowning and Jerome Powell is like throwing out a life preserver into
the Jerome Powell one that always works is the laser beam on. You put that on a thumbnail, man. That's it. People are clicking on it. I don't.
Or the fake tweet.
Yeah,
the fake tweet next to like the Fed or something.
Yeah, that's another one. Yep, and then fire. Fire in the background. You got some fire going on. Oh, that's it. People are clicking on that. It's just one of those things. It's human nature, and people want to know the secret, the inside secret. What they want to know. They want to be informed, and those kinds of thumbnails attract their attention. So
I'm just jealous because my Photoshop skills aren't that good.
Mine are. You asked me who did mine. Kristina Smallhorn does it.
I know. I was really disappointed by that because I was like, let me hire your thumbnail person, but it's you.
That's me.
And I have a feeling you probably don't want to make my thumbnails.
Jesus Girl, aka Julie A, says, Kristina and Kyle, and Win the House You Love. I still love listening to you and Dan on my morning commute. Kristina, love listening to your podcast as well. Thank you so much. I appreciate
Julie is a podcast girly. I like it.
I have this as a podcast. Anybody that wants to hear this live stream that Kyle and I have had today, you can listen to this as a podcast. Look for Real Estate for Everyone with Kristina Smallhorn, and you can hear this on Monday. Eddie's so good about this. He downloads it, uploads it to all the podcast sites, and you can listen it onto your commute on the way on Monday. He usually does it in the morning. Every once in a while, he forgets. But
can we get some like Eddie love in the chat? Like we need some like
everybody loves Eddie.
Eddie's the best.
Yep. Thank you, Eddie. And I want to say thank you to our moderators. There was many in there. Amy Hayslett was in there. She's a realtor in Phoenix, Arizona. We have Debbie Brady. We had Construction Cronies. We've had some friends that we hadn't seen in a while, like VCG Construction. And I want to say thank you to all of our super chatters today. I appreciate every single one of you who help support the channel. That's amazing. Kyle, how can people get a hold of you if they want to get a hold of you?
The best way is probably through YouTube. My YouTube channel is called there. Look, Eddie's the best, man.
Look at that handsome devil. Wow.
It's like, I just thought it and it happened. My YouTube channel, Win the House You Love. I cover a lot of mortgage programs and help people understand how they work. So you're welcome to go there. On my website too, there's a place we do kind of a cool thing. You can ask us a question and we reply with a video. So it's been a nice way for people they're not ready to get pre-approved or they're not ready to make the next step yet. If you just have a mortgage question, you can ask us there, and it'll be either myself or another loan officer on our team who will record a little personal video for you and answer that.
Would you email it back to them?
We do, yeah. So we've done about 1,000 so far.
That's nice.
So it's a nice little thing.
I love it. That's a great idea. You make good thumbnails. I mean, they're not as great as mine, but
well, yeah, they're certainly not as good as yours. I need to incorporate more weather, more. I don't know.
Who's that guy with you on the thumbnail?
Dan Frio. Dan Frio is a business partner of mine. So he's our team lead. So Dan
Uh-huh.
also has a channel,
Uh-huh.
but he works with most of our mortgage home buyers.
Gotcha. Gotcha. Wow. All right, everybody. If you haven't yet, go over there and watch Kyle over there at Win Your House You Love. He's been doing this for a hot minute. He knows his stuff. And Eddie's going to go ahead
Most
and
of the
tell you
time.
my website.
There's
If
the
you happen
feet.
to
There's
need,
the feet.
yeah, there's a feet pic right there. The kids hate it. Kids hate it. But if you want to get a hold of me and you want to find a real estate agent in your area that will negotiate their fees, go ahead and contact me right there at KristinaSmallhorn.com. Hit one of the pink links and tell me the area you want to move to and the real estate agent you're kind of looking for, whether it be a buyer or seller, and make sure you leave your phone number so I can give you a phone call. All right, everybody. I want to say thank you so much to everyone. I want to say thank you to Kyle, and we will see you next week. If there's anything you want to talk about specifically, you can always email me at KristinaSmallhorn.com, and maybe I'll do a live stream about it that week. So thank you. Thank you. I love you guys. You're going to wave goodbye, Kyle?
Hi. The dancing's all you. Oh,
No,
wait, no,
you
it's this
can
way.
dance. You can do this.
Okay,
You
I
do
can
a little wavy. Because this is like, Eddie did some like trippy music today. Didn't he? It's kind of trippy, right?
Yeah, it's not as ravey as last time. It's a little flowy.
I think it's like he's breezing into spring, you know?